So I am Christina Wynn. For those who may not know me, I am a program consultant for the Illinois Coronavirus Response and Relief Business Center. And I'm going to give you all just a quick overview of what we have going on, and then we're going to hop right into Dr. Calloway's workshop today. So the ICRR Business Center is a program in partnership with the Chicago Minority Supplier Development Council. The council is there to help minority businesses do contracts with corporate organizations. So if you are minority and you're interested in getting certified and doing procurement specifically with government or corporate entities, then the Chicago Minority Supplier Development Council is an organization I encourage you to get connected with and just learn more, join more of our events and different things that they have going on at the council. So the mission that we have at ICRR is to assist minority-owned businesses in urban and rural areas with understanding and taking advantage of resources that are made available by local, state, and federal government agencies. Through subject matter experts like Dr. Calloway, we're able to provide these workshops at no cost to you on things like finance, supply chain management, organizational development, and more. So I mentioned earlier, and everyone may not have heard this, I'm going to put another link for those who didn't receive the first one for an intake form that we have. And I encourage you to complete that intake form to make sure you're on our newsletter. And you can submit if there are things that you want to see as far as content through workshops. Let us know and we can find expert speakers who can come and bring that information to you. Today we have Dr. Adam Calloway. He's the managing director of Sagis Lumineer, Chicago, Illinois-based small business development consulting company. You will get this presentation that I'm going over. So the link that we have there is directly to Dr. Calloway's LinkedIn. So I encourage you all to get connected with him on LinkedIn if you are not already. And then I'm Christina Wynn. Again, I'm the consultant for, or one of the consultants for this program. If you want to connect with me, you can do so as well. And if you have any questions following this presentation, make sure to shoot me an email and I'm happy to answer those. So again, we're the ICRR Business Center. If you have any general inquiries, make sure to just reach out to our team email address and we will get back to you promptly. And this QR code is another way that you can get to our intake form, but you can use that once you receive this presentation. I'm going to put the link in the chat for you again. So that is all that I have as far as an introduction is concerned to just the ICRR Business Center. Again, my name is Christina Wynn, and I want to pass it off to our expert speaker today, Dr. Dr. Adam Calloway. Hello. Um, he's doing a small business strategy workshop series. And so this is workshop number 2 of that series. And I'm very excited for him to be able to dive into that content. So I'm going to pass the mic to you, Dr. Calloway, and you can take us away.
All right. I hope everyone can hear me fine. Again, I'm Adam Calloway. We have a great group today, so a nice, intimate group. And what I want to encourage you, if you have questions along the way, please just raise your hand electronically, right? And I will call upon you and we can go ahead and answer your question. We're going to be talking about pricing today. And I would have to say this is an area where a lot of people stay away from. They think of pricing as something very personal. It's just for me to know. Unfortunately, pricing is also a public item. It's something that everyone sees, whether it's your competitor or if it's your customer. Your customer, of course, has to see your price. So you have to be wary of the fact that this number that you attach to your product or service is important. And it has, I'm going to say, some very significant power. And we're going to talk about that today. And we're going to talk about also strategy, pricing strategy, especially as we move through this environment of COVID. With COVID, whether in COVID or not in COVID, you have to be mindful of your pricing. The key with the COVID environment is that everyone is impacted differently now. Your customer is feeling it, your competitors are feeling it, and you're feeling it. And so now you have to decide what the number should be, what that price number should be for your customer so that they're satisfied, so that you can remain competitive, so that you're not knocked out of a contract opportunity because you price too high, or you put your business in jeopardy because you price too low. So that's what we're going to be talking about today. So one thing is, I set the closed caption to on. I'd like to know from you, is that okay? Is that helpful? Or do you want me to turn it off because you may be distracted by the transcript going across the bottom? So I'd just like to know from you, is this okay? Just shake your head for those who I can see. If this is okay, I'll leave the closed caption on. Everybody's fine? Excellent. I will leave it on. All right. The next question I have is this. Can you just share with me in the chat? So, of course, this is WebEx, which is the same as Zoom. In the lower right-hand section, you'll see the word chat. If you click on that, you can interact with me by text. And so we're going to go ahead and practice with just our first poll question. So the poll question I have for you is this. I'd like to know the type of business you are in. So are you in professional services? Are you a retailer? Are you a manufacturer? Are you a restaurant? And if you're in a different type of business, please just type that into the chat, and that way it gives me a sense of who's in the room, and I can tailor the conversation to the audience. Contract manufacturing, professional services. Professional services. Thank you, Janine. Okay. So we got one manufacturer, as I know, and then we have, I'm going to assume the rest of the room is professional services. Great. Excellent. So thank you for participating. Let me go ahead and start sharing my slide presentation so we can get going. Okay. Okay, it's coming up now, and what we're going to do is I want to all right. Hopefully everyone can see it cleanly. What you should see is a PowerPoint screen that says today's session is sponsored by the Illinois Coronavirus Response and Relief Business Center and the City of Chicago Minority Supplier Development Council, and I thank them for this opportunity. And myself, I represent Sagesse Luminaire, and we're also supported by another instructor who has a company called Luckman. My background very quickly, I spent the last 11 years working in the small business community, primarily in two national programs. One is called the Goldman Sachs 10,000 Small Businesses Program, and the second is called the U.S. SBA Emerging Leaders Program. Both of these programs are tailored for businesses that are up and running, that are looking to develop a 3 to 5 year plan. We focus on finance, accounting, marketing, operations, and of course, general management. The goal is that you will come out with a tactical plan for moving your business forward into the future. Both programs, whether the SBA program or the Goldman program, are both free of charge. So it's you can look these programs up on the internet and get some information on how to register for these programs. I'm also a small business owner, and my focus there is on small businesses, usually with employee counts less than 25. And I essentially do either consulting or executive coaching with the founder. So again, I've been doing that since about 2013. So here's a question for you. And I want you to take 2 minutes to think about this, and then I want to hear a response from the room. When you decide on a price for your goods or services, what does the price represent or mean to you? So when you decide on a price for your goods or services, and majority of you are professional services, and from the manufacturing side, essentially you're pricing, you could be pricing based on a contract price or per unit cost there. But what does the price represent or mean to you? So take 2 minutes. If you have a piece of paper in front of you and a pen, please jot down your thoughts. And then I'm going to just go around the room quickly and get your insights, and then that's going to help propel us into the presentation. Okay, just 20 more seconds. All right, so I'm just going to go around the room, just call your name. I'm going to start off. I'm going down the participant list here in WebEx. So I'm going to start off with Gabrielle, and I'm going to record some notes over here on my side. So Gabrielle, when you set that price, what does it mean to you?
When I set the price for my goods, as a photographer, graphic designer, um, I'll set off of quality or detail and the extent of how long a project is or what type of project I'm doing as well.
Okay, perfect. Let's go to the next person, Janine.
Hi, everyone. I wrote down three things. I wrote down the value of my time, how many hours or, and just the inherent value of my time, what I think the service is worth in the marketplace, and then the short and the long-term impact of my knowledge and expertise.
Okay, the last one, you faded off a little bit. The last one, which was that again?
Like for the organization, the short and the long-term impact of my knowledge or expertise.
Okay, impact on your organization. All right. Krupal.
So we typically bill time and material when we do our consulting projects. So I price it based on the experience level of the consultant,
Mm-hmm.
the availability or lack thereof to fill the skill set in the market, and the length of time the project is going to take. So I might bill a little bit higher if it's a short-term thing. I might bill a little bit lower if I know it's, a consistent revenue stream for several months.
Okay. So in this case, we'll say revenue. I'm going to say revenue sustainability. Sustainability. All right. Laura.
Our business is contract manufacturing, and so we have a lot of moving parts, and
Mm-hmm.
the raw materials right now change day to day, certainly maybe within a day. So we're rebidding everything every time it comes up now. And so for us, it's making sure we capture all the components of them, of each one, and then also starting to look at our customers who are looking further out and trying to tie up more of our equipment time, the value to both of us of that, because we want it to be fair. We want to be in agreement. And we want to know that, we have a willingness to compromise where we need to, because our business, while it's competitive, there's also not capacity in the market. So unlike, let's say, the last 40 years we've been doing this, we're in a unique position that we are more in the driver's seat than we've been in the past.
Okay. Gotcha. Excellent. And Sharon.
Well, since I'm a subject matter expert for with all things Social Security and Medicare, of course, mine would. I think that the pricing depends on corporation versus small agency, and it also depends on the follow-up and research that be involved. Say, for instance, for more complex information about disability. And then
Mm-hmm.
I also look at the level of expertise that it's going to take. That is to
Mm-hmm.
say, something general basis versus something that is more direct, like workshops for social workers and mental health. So a lot of that depends on tailoring to the needs of the customer.
Okay, perfect, perfect. And so that's it. So I'm going to go ahead and reveal what I've typed here. And this will help us with our conversation for the rest of the morning. So I'm going to stop the share for a minute. Start a new share with the graphic I've created. So here you go. What I've typed in is just a little matrix here. On the left-hand side is the customer's perspective. On the right-hand side is the, let's see a little typo there. I'd like to correct that. There we go, is the business perspective. So the question is, when you decide on price for your goods or services, what does the price represent or mean to you? As you see, there's a long list on the right-hand side. Quality. So it represents the quality that we produce in our products and services. Again, from your perspective. The length of a project. So if it's a contract that I'm going in for, I take a look at developing a scope of work. So I think about how many hours I'm going to have to deploy toward that scope of work. The value of my time, how much am I worth per hour? $100 an hour, $200 an hour? Because I'm a subject matter expert, as we just heard Sharon say. So I'm bringing something to the table. So how much am I worth? Worth in the marketplace. How do people perceive my business relative to my competitors? Time and material. Again, thinking about it from a contractor standpoint, because I have to produce the work, and therefore how much is it going to cost me to bring in the right labor, how much bring in the right resources, and so on. I'll skip to a couple of these. Revenue sustainability. I got a price so I can bring money into my company. If without the money coming in, I can't run the business. The size of the business. How do I compare it to the large corporations? What are they pricing versus how I'm pricing? In professional services, that's quite common. How much are the large consulting companies charging versus me per hour? And can I actually command that hourly rate that they're charging? Follow-up research. I go into a discussion with the client tells me what they need. I'm now going to use my expertise to do some heavy research for them so I can bring back to them something that they can use, something that is what they would perceive valuable to them. My level of expertise. What level of expertise is going to be required for me to implement this contract? Now, here's the thing I want you to think about. Out of all the responses, I didn't get a lot from the customer perspective. And this is what we're going to focus on today. When it comes to pricing, it's a two-sided equation here. I have to think about what pricing means to me as my business from a cost perspective. I want to cover my costs. I want to generate a profit, so therefore I also need to bring in revenue. But I also have to think about, what does the price mean to the customer? So think about yourself as a customer. I need to bring in a contractor to repair my roof of my house. The last thing you want the contractor to tell you is, it's just going to cost you this and that's it. What you want them to do is come in and say, well, it's going to cost you this, but let me tell you what I'm providing to you. Let me tell you how it's going to protect your home. Let me tell you how much time it's going to take so we're not inconveniencing you. The customer has to be part of this discussion. In other words, pricing is the start of the negotiation. So think about that. Pricing is the start of the negotiation, because the customer has in their mind a set price for what they believe it should be for the services you provide. Where does that come from? It comes from things they've seen on television, things they've read in a magazine, talking to their peers. You have to convince them that what I'm offering is fair, is equitable to what they expect. And if they agree with that, then guess what? They will buy. So I would like to say, after this conversation that we're having this morning, if you're sitting at home, take the same matrix and try to figure out, what does the customer see when they're buying from me? And how do they view that price when they're buying from me? So do they see the price as fair and equitable to what they received? Do they see that they've solved a problem that they have? They're coming to you to solve a problem, right? So they know they have to pay for a resolution. So they want to feel that a resolution has occurred, and a resolution has occurred in a manner that they're comfortable with. So you have to think about it from both sides, not just about cost recovery for you, but also about satisfaction for the customer. They have to see the value in what's happening here and what you're providing. So let me go back to the PowerPoint and you'll see where I'm going with this. So we stop the share and reshare the PowerPoint. Okay, you should be able to see the PowerPoint now. So what we're going to do, we're going to explain the need for a pricing strategy. Because this is a negotiation, your number defines something for you. It provides for you in terms of cost recovery, revenue generation. On the customer side, there's also something they're looking for when they see that number, when they see that price. They have to feel, again, that sense of comfort that once they write you the check at the end of the engagement, that they have to feel comfortable that they've gotten what they desired. They've gotten what they needed. Establish a linkage between price and supply and demand. We got to bring in a little bit of economics here because that's going to help you set your price in the future based on the reality that we're facing today post COVID-19. Define what we call pricing dimensions, something you may not have thought about before. In this case, it's just a checklist, the things you should consider when you're setting a price number for your product or service. And then I want to show you a couple of pricing strategies. Some are linked to particular industries. That's why I was asking you earlier what businesses you're in. But it doesn't mean that just because there's a price format for your industry, it doesn't mean you can't try a different pricing strategy based on an opportunity you see in the marketplace. Okay, pricing often is considered a taboo for many owners. They don't want to talk about it. They don't want to even discuss it with their peers within the business or outside the businesses. Often business owners take approaches that may leave the business vulnerable or at high risk because they're not having conversations with either a subject matter expert or with people that they trust, such as maybe an advisory board. So what tends to happen is this. My pricing is a secret. In terms of the approach I take to pricing is a secret. I don't want my competitors to know. The issue with that is your price is public. If I'm running a retail store, eventually my competitor can walk into my retail store, walk around the store, and understand what I'm charging for price. If I'm bidding on a government contract, eventually the government will release the contracts and the bids. So eventually somebody's going to see the price that I offered for a contract opportunity. So eventually price is going to become public. So it may be secret from the standpoint of, I don't want people to know my operating costs or my profitability, especially if I'm a sole proprietor or if a privately held company. That is fine. But when it comes to price, because I have to share it with the competitor, I have to share it with the customer, someone's going to see it eventually. I'll just match my competitor. I'll follow the going rate. So I come in as a professional services individual, first time in the marketplace. I go out and I say, oh, so-and-so's charging $125 an hour or $75 an hour or $50 an hour. I'm going to charge what they charge because I'm a new company and, I got to go with the going rate. That's dangerous because the going rate may not match your cost structure. Your cost may be higher than $50 an hour. Your cost may mean that you have to have a break-even rate of at least $75 an hour. So you have to, when setting price, you have to stop for a minute and say, let me take a look at my operating costs and see what my minimum number has to be to cover that operating cost. And then if you find out it's going to be higher than the going rate, then guess what? You're going to have to put on your marketing hat and convince your customers that you're bringing more to the table than your competitor. But keep in mind, if you just grab your competitor's price, you're telling the consumer you're just like your competitor. You're offering the same features of your competitor. Your competitor can be a terrible service provider. So are you saying you're just like them? Or are you trying to tell the customer you're better, you're different, and therefore I should be able to command a higher price? I don't know. I'm guessing anyway. I'll just test the market. This is a true technique and a true approach, but you should use this approach at a certain time. If you have a new service, don't know what the acceptability would be in the marketplace. Well, maybe what I want to do is run a pilot. So then I don't know, right? I don't know what the market demand is for this. Let me run a pilot now and see if people like the service, see if they like the product, see if they're willing to buy it, and see if they're comfortable with the price. And I will survey them to get a sense. Well, what do you think about it? What do you think about the price? You feel comfortable with this? Okay. But that's when I'm doing a new service offering, a new product offering, and I'm doing a pilot. You don't want to go out to the general market when this is your primary product. This is the way you're going to make money and just say, hey, I'm just going to guess this. I'm just going to throw it out there and see what happens. What could happen is this, and people don't think about this. You could come in and price yourself low and find out you have a very attractive product and you provided very attractive services and people are willing to pay more for it, but now you can't raise the price because people have gotten comfortable with the price you're at and with the level of service that you're delivering. If you come back to them later and say, you know what, I'm going to raise my price by 50%, trust me, they're going to throw up their hands and they're probably going to walk away. So again, that's why knowing the price and that significance of that price is important before you put it out there, before you communicate it to the public. I lowball everybody. I'll lowball everybody and I'll take over the market. Again, this one works against you if your operating costs are too high. So first, you need to understand your operating costs. You need to know your break-even point. You need to also consider this. I've been doing this, as I said, for about 11 years, working with small businesses in this category. And I find many still do not pay themselves a salary. So when I'm asking them, what's your true cost of operation? They figured out how much it costs for salary for their employees, how much it costs for rent, how much it costs for utilities, and so on and so on. But they haven't considered payment for themselves. And therefore, that's not true cost. You should be operating that business focused on true costs, salary for yourself, salary for your employees, and all your operating costs included. What does that price need to be? I'm not worried. They will buy it because the product is just that good. That's the build it and they will come philosophy. And again, thinking about the consumer ultimately wins the negotiation. And they win the negotiation by actually making the transaction. So I give them a price. If they're not satisfied with the price, they will not buy from me, no matter how good the product is. So they're going to buy when they think that price matches what they believe it should be. All right. So to take us through, there's some subject matter experts out there that I tap into, and I'm going to tap into them with several quotes. So these 3 quotes are going to lead us through the conclusion of this presentation. The first one was by a gentleman named Philip Kotler. Philip Kotler was an expert in marketing. He's written several books. These books have been used in the major colleges around the world. And his focus was on marketing. He says pricing is the only element in the marketing mix that produces revenue. The other elements produce costs. And we'll talk about that in a minute. The next one is by Warren Buffett, a billionaire. He said, price is what you pay, value is what you get. And the third quote we're going to use to frame our discussion today is by Raymond Corey, again, Harvard business professor. Pricing is the moment of truth. All the marketing strategy comes to focus on the pricing decision. So let's break these down. What does marketing mix mean? Marketing mix means this circle here: product, place, promotion, price. This is how a marketer thinks. As a business owner, you must start wearing this hat of a marketer as well. We tend to think of marketing just from the promotional aspect. What's my social media strategy? Am I on Instagram? Am I on Facebook? What's happening with that? You can't limit your marketing focus to just promotion. You have to look at all 4 spaces. So when we look at product and place at the top, this is where we create value. I heard some of you say it. Our photographer said, when I think about my price, I think about the quality of my work. That's the creating value. So that means
Are you ready?
Oh, we got somebody out there.
Okay.
Can you mute them for me, Christina?
Yep, working on it now.
All right. So when we think about creating value with product in place, this is where we show our quality, right? You had it in your list. I want to hire the right people. I want to have the right experts on my team working on this contract with me. I want to have the right people in place who are good contractors who can get the work done, especially in the IT space. They're hardware specialists, they're software specialists. So we create value by providing that service that we promised our customer. And we do that with the product or service we offer and how we get it to them. That's what place means. Promotion, we already know, that's advertising. That's how we communicate value. And again, we spend a lot of time there. We tell our customers, man, we're great, we're fantastic. We do a great job for you. And then when the customer selects us, all of a sudden things are not quite what we thought it was going to be. They don't see the quality, or our services are kind of lackluster, or we're inconsistent, so on and so on and so on. Then they start looking at the price and they go, wait a minute, did you deliver value to me? You said it's going to cost me $250 an hour. This doesn't feel like $250 an hour. This feels more like $11.50 an hour. So everything has to come together. when I'm offering this price. The service quality has to be there. How I distribute that service has to be there. The advertising has to match what I'm promising. And that price is going to be that de facto number. It's going to be that negotiated number that they either agree to or they don't agree with because I didn't fully deliver. So pricing is the only element in the marketing mix that produces revenue. If I cannot win the negotiation, I cannot bring revenue into my business. Look at this one here, voice of the customer. Price is what you pay, value is what you get. Only 8% of customers describe their experience following a sale as superior. Yet 80% of companies believe the experience they provided is indeed superior. What is this getting at? That goes back to the matrix that I started off with today. From the business standpoint, you know your business. You know what you want to share with that customer. You know what you want to produce for that customer, and you're committed to it. But the question is, what does the customer see? It's always that question we have to make sure we're answering. What does the customer see? And that's why market research is important. You need to survey your customers. How do they feel about my service? Did I meet what I advertised? Because this is saying only 8% believe that the service they received was superior. That means 92% said, they promised me this, they gave me that. I'm okay with it because I had to have it done. But, you want your customers to have superior experiences going forward so they don't question your price in the future or even now. When you're dealing with a COVID environment like we're in now, there's a lot of companies that have gone out of business. There are a lot of companies that are limping along. You want to demonstrate that you're not either one of those companies. You're not getting ready to go out of business, nor are you limping along. You actually can deliver on what you've promised to them. And that's why you can justify the price. One of you mentioned, if there's few suppliers out there, I should be able to command a higher price. Well, guess what? COVID environment is producing that. There's fewer suppliers out there. But customers are still going to be critical in looking at you to say, okay, you survived. How did you do that? Because everyone else fell to the wayside. So they're going to want you to prove and justify that you are who you are. Okay. When we think like a marketer, we understand there's always three parties that are involved in this transaction around price. The seller, that's you, of course. The buyer, that's our customer. And your competitor. Your competitor, you may hate them, but guess what? Your competitor creates a standard that you can compare yourself to. So we need to have that competitor out there, because sometimes if I don't have a competitor, it's harder for me to negotiate with a seller because they don't know my work. They don't know me. They've never, I can't demonstrate maybe I've done this work before, and they're going to be a little skeptical. But if they have a competitor out there where they know that person, they know the business that they do, then they'll contrast you against them. And if they hear the right things coming from you, they may come to you. So having that competitor out there can actually help you from a pricing perspective. But you have to know what your competitor is offering, the quality of their services, the quality of their products, what's justifying their price. Why are they, lowballing everybody in America, right? What is their strategy? What are they trying to do? Are they trying to force everybody out of business and they're actually losing money? I need to know those things. So I need to understand my competitor. So when we look at this next slide, from a seller perspective in this transaction, I keep using the phrase transaction, I'm looking for market acceptance, especially in the professional services area. I want to be able to justify $250 an hour. Why? Because guess what? The largest consulting firms are charging that. The skills I have, the knowledge I have, the deep industry knowledge I have is worth $250 an hour. I know this because when I left the company I was working for before, that's what they were charging for my services. So I want the market to accept that. I want to earn a profit, of course. I got to do cost recovery. I want to also create a reputation. So when I look at those quotes that I gave you before, and I say, you know what, I'm going to lowball everybody. Well, you're also sending to the marketplace that you are maybe coming in at that affordable track. I just want to be an affordable producer or affordable seller for my customers versus someone who comes in and says, I want to be perceived as someone who's premium, someone who is highly qualified, and therefore I'm willing to charge a higher price. But remember, that price number defines who you are in the marketplace. You want to make sure that that price represents what you're advertising. If you're saying I'm the best, you don't want to set a price so low that it makes it look like you're just a charlatan, right? You're telling me you can do a lot of stuff, then why are you charging so low? In fact, you're charging below all your competitors. I don't understand, right? So you got to remember that price is also creating your reputation, your brand. From the buyer's standpoint, it's a satisfaction of needs and wants, hands down. You can argue all day with your customers, but if they say my needs were not satisfied, you got to figure out why they say that. You know, what did I miss? What did I give them? Or are they just being difficult? Not every customer is difficult. So if every customer is saying the same thing, then something you're going to have to do some self-reflection. But you do need to find out what the needs and wants are of your customer. And one of you mentioned that. I got to talk to them. I got to let them know, hey, I'm about to give you all this time and effort. You got to realize that I'm giving you commitment here. You also have to give me commitment. You have to agree that you're going to work with me, right? So there's this, again, that give and take in a negotiation. They want to have a satisfying experience, and they're looking for fair value. From the competitor standpoint, they're looking at competitive advantage. Your competitor is always looking at you, trying to figure out, how can I make myself different? How can I make myself better than you? And you're doing the same thing. They're trying to get a higher market share, meaning they're trying to capture more of your customers. And last but not least, they want to earn sales just like you. So as a business owner, you must have a consistent pricing strategy that adapts and looks at the purchasing decisions through the eyes of your customers. So I keep emphasizing that, is that you're looking at pricing not only from your side, but you're also looking at it from the customer side. So I'm just going to go through these very quickly. So these are questions that you can ask yourself to start thinking like your customer. So why should somebody buy my product or service? Now, you don't want to answer it from your perspective, hey, because I'm the best in the business. You know, that's what my boss told me. I won awards and da-da-da back in the day. The question now is, now that you have your own business, is why should they buy from you when there's 400 other businesses like you in the city of Chicago right now? So you want to be able to answer that question. And it's not a discouraging question. It's a question, hopefully, that will stimulate you to go, here's a message I want to share. Here's how I'm going to defend what I do. How will they know I will do what I say? Again, that's the negotiation side. The customer is always making that call. You do the same for your own family and for your own home. Anytime you're looking at a contractor to do work for you, anytime you're walking into Target and you're trying to make a decision about what to buy. Or let's say Home Depot will be a better example. I go into Home Depot and I need to have some services done. And I'm always thinking about, okay, you look good, you sound good, you seem friendly, but I'm always thinking, how do I know you're really going to do what you're telling me you're going to do? You're asking me for $3,000 here, right? Customers always thinking that. I'll skip down to one other. What are others saying about my product or service? Have you defined your brand image? Have you defined how you want the market to see you? Pricing is communication. You are communicating something with that number that you post, or you put onto that item, or you put onto your website. So is it matching the brand identity that you want to create? So I'll stop there for a minute. I've been talking for about 20 minutes here. Any questions or comments? And then we're going to transition to the last part of the presentation.
Hi, this is Krupal. I was just curious, do you recommend different ways to get feedback, not officially from potential customers or past customers? Are there things that seem to work better? Just curious what your thoughts are as we
Yes.
focus on answering these questions for ourselves. Just kind of, how do you recommend doing a gut check to make sure we aren't in our own heads answering the questions, but really thinking about it from a customer view?
I thank you for your question. I mean, that's where you want to get to. When I used the phrase earlier about putting on the marketer's hat, that's what marketing professionals do. They're not uncomfortable doing a survey. So you hit it right on the head. I need to speak to my current customers. I also need to speak to my former customers. Your potential customers are going to ask one of those two top questions. How do I know you're really going to do what you're going to say? So they're already going to be a little skeptical about you because they haven't worked with you. But people who have worked with me, I should feel comfortable calling them on the phone, and you'll be surprised. I've done this before, and I've gotten this feedback from other business owners that have done it. When they've called their customer's been surprised that they were interested in their opinion. And sometimes they'll push back with, hey, you're doing okay with me because that's why I'm still doing business with you. And they go, well, thank you very much. But let me go a little bit deeper with you. What do you like about our service? Because that's what you're really trying to find out. What do you like about us? Why, after you've been with us for 5 years, 10 years, 2.5 months, what have we done for you that you weren't getting from your other suppliers? And you want to ask them that why they're happy with you, right? So that you can get that feedback right away. That information can go into your marketing spend, right? That information can go into your one-on-ones with your potential customers. If you've lost customers, and again, I've had people who've done this, they say, I don't know if I can call them because we've lost them, and are they even going to take my call? And they were surprised. They picked up the phone. They literally said, hey, I just want to talk to you just for a minute. Can I just get a minute from you? I'd like to know if you could just share with me where we fell short or why you moved on to another competitor. Don't want to know who the competitor is. I just like to know why you moved on. Some people may come back right away, well, it's your price. And you may think in your mind, the problem was we were too high. The next question would be, okay, you said it was our price. Was it too high, too low? Did we not meet your expectations? And that second part will get to the heart of the matter. It may not be anything wrong with your price. They may say, the price was fine, but you promised that you were going to do this and that. Or when I picked up the phone and called your office, nobody answered the phone. Or when I talked to your employees, they didn't seem to know anything about us. That made me feel uncomfortable. And therefore I decided to move on to somebody who respected me, right? That's what you're trying to find out from these surveys. And they can take 5 minutes, 10 minutes, 15 minutes, or even a 30-minute coffee with somebody. Maybe post-pandemic, we can do that even more. But having those discussions will give you the information that you need. Did I answer the question?
Yeah, thank you.
Okay, excellent. Anyone else? I don't want to just, keep talking. I can talk, for a couple hours. I don't want to do that. I want to hear from you if you have anything top of mind. Or even if you disagree with anything that I've said over the last couple of minutes, let me know. Are we good? Looking at a couple of heads shaking. All right, we got to keep it going. All right, so let's establish a linkage between demand and supply. So demand comes from the perspective of the buyer. Supply is from your perspective as the seller. Now, we have to talk about this because you cannot talk about pricing without talking about demand and supply. So at the end of this presentation, you're going to get a summary of my presentation, and I'm going to include the slides around supply and demand, so you don't have to worry about trying to write down everything, but I at least want to walk through it. So here's our next quote for today. So pricing is the moment of truth of all the marketing strategy. It comes to focus on the pricing decision. The question is, why is that? Why is pricing the most important thing around marketing? And why is it so important to the business? You've already said it earlier. It drives the revenues. If I don't have a price, I use this equation here, price times quantity sold. If I don't have a price, I can't generate the revenue. So if I don't give a price to the customer, there's no way I can bring revenues into the business. If I set a price that's too low, I'm bringing revenues in, but I can't cover my costs. My goal is to be profitable. Well, I need to find a price that's going to at least cover my costs. So it drives revenue. This price drives revenue. The quantity sold side is driven by your advertising. Letting people know you're out there, letting people know that your product's out there, your reputation precedes you, all of those other things. But unless you got a price to put against that quantity, you will not generate any revenue. So now let's look at how that price changes based on the business that you're in. So price per unit, typically a grocery store, typically a retailer, maybe a rental company. So price per unit, it costs $6.95 for a steak. costs $5 for a gallon of milk, that kind of thing. Price per hour, we see this in professional services, maybe even a maintenance shop. If I had a maintenance shop fixing cars, health services, I may charge you by the hour. A fixed fee, we see that on the contractor side. So I have this contract, I'm sitting down, want to do work with the government. They're asking for a fixed price contract, which means a total dollar amount. So I sit down and I negotiate with them on this fixed fee based on all the costs that I believe I'm going to incur. Plus, I add a little bit of a profit margin in there too. So this is what we mean by price, of course, in that equation. You must always keep this equation in front of you so that, when you're making pricing decisions, especially even if you're doing a back of the envelope negotiation with somebody, with a potential buyer, and they're on the phone with you, you're on the phone with them, pull out this equation and figure out, okay, if I charge them this, and they spend X number of hours with me, here's what I'm going to bring in terms of revenue. Do I believe I can cover my costs, right? So you want to be able to have this equation, use this equation often. When we look at supply and demand, on the demand side, what does the customer think about? So this could be your checklist, and you want to make sure you sort of cover these things. Price, of course, is what they're going to be looking at, and that's going to either bring them into the room for a discussion with you, or it may chase them away. Their income, of course. They may want to do business with you. They may think your price is fair, but their income, the amount of money they have available to spend with you, their cash flow, may not be there to support it. You can make a couple of decisions. You may decide, okay, I'm going to offer you a discount. But you'll say, Adam, well, if I offer them a discount, I'm not covering my costs. You can offer them a discount with a caveat, which means, guess what? I know you don't have a lot of money right now. I do want to do business with you. What if I modify the services a little bit? I won't be able to offer you the full Plan A service, but I can offer you Plan C or Plan D. That's what event planners do all the time. They can give you the gold plate at the best hotel with the best food. That's Plan A. They've talked to you and they say, you know what, I really don't want to lose this customer. I know they're going to go to someone else and do business with them. Let me offer them Plan C and D, something that's more affordable to them. You're not hurting the relationship. You're actually building the relationship because you're recognizing that they have a limitation on cash flow. I don't want to lose the business, but I'm not going to sell them something that I can't afford to sell them. So I'll modify what the offering is. Okay? Expectations. What do they expect in this relationship with me? Relative competitive pricing. How are my competitors priced versus me? And then, of course, their product or service preferences. What services are they looking for that they're demanding relative to another customer who's not demanding as much? So that's on the demand side. On your side, you look at all these items and you could probably say they fall into that cost category. So technology changes. Everybody wants you to do business online now. So guess what? I have to buy computers. I may have to buy some other hardware to support me being online, or now I'm going to have to pay some new fees to maintain my website. So you're thinking about that from a cost perspective. Price expectations, we've already talked about that. The number of competitors out there. If there's few competitors out there, I may be able to charge a little bit more money temporarily. If there's a lot of competitors out there, I may have to match where they're at, but then I'm also going to match my services close to them, or I may decide to take a little bit of a loss, provide additional services, because guess what? I want this business. But you're taking that into account. You've done the calculation. You know you're not making as much in profit, or you're just breaking even with this deal, but it's important to you, but you're doing it consciously. The price of substitute goods just mean there's someone else out there that can come up with a different thing that can compete against what I'm offering, and the customers may go for that. So that's on the supply side. The supply side is always from your perspective. The demand side is where I'd like you to lean a little bit more into and start to think about, when you think about your current customers, how would you address those items for your current customers? By doing that, you're getting to know them more and more, which is going to be important to you as you move forward. So the conclusion around the supply and demand, the owner must consider economic factors and business requirements as they're setting price. So I have to think about the supply and demand. That's the economic factors. And I also have to think about my requirements. So what are your revenue goals? Now, in a whole nother course, a whole nother discussion, we could talk about planning, right? Financial planning and all that. one of the first things you should think about is now January is, have you set a revenue goal for your business for 2022? You should do that. Because if you set the revenue goal, it's going to help you determine how many customers you need to bring into your organization in order to support that revenue goal at a certain price point. So set a revenue goal. You should also be setting profitability requirements. And that profitability requirement should include also a salary for yourself. And it doesn't have to be a huge salary, but you should start paying yourself. And over time, as your business grows, that salary number should increase as well, because you are the owner and the founder. Support brand market position. So you want to make sure that whatever that price is matching my brand strategy. On the operating expense side, I should know what my break even is. When I'm no longer making money, I'm actually losing money. I should understand that. So that means you want to sit down with your accountant. If you don't have an accountant, you may want to get an accountant that will sit down, put together your income statements. So you make sure you understand what those costs are and how they're changing over time. So you can make sure you can, see where you are for break even. Oh, that last bullet down there, I just want to say, when you generate a loss, most people say it's okay to lose business for tax purposes. You want to, reduce your tax burden at the end of the year. You have to understand that when you generate a loss, meaning that your revenues are less than your expenses, literally what's happening in your business is that you're going into your personal pocket to keep the business afloat. Eventually, you're going to run out of money. So your goal should always be break even or better. I want to at least generate a profit at most times, but at least break even so then I can cover all my costs so I can keep the business alive. You should stay away from hovering and living and breathing in a loss position, because somehow that money is getting into your business, and more than likely it's coming out of your personal pocket, or you're taking out loans and so on and so on. Okay, pricing dimensions. So pricing dimension. Pricing dimension is what we like to call the owner's checklist. So you say, Adam, you've given me a whole lot here, man. I'm taking a lot of notes. Can you just sum it up for me? So here it is, just 5 points. So when you think about pricing broadly, it's the nature of the market that you're in. So if I'm a professional services, it usually means I'm dealing with contracts. That's the nature of your market. If I'm a retailer, it usually means I have things sitting on the shelf for people to buy, clothing, or maybe if it's a food or grocery, I have food items. I have to, if I'm in a retail grocery, of course I have to come up with individual prices for each one of those items. When I'm dealing with professional services, I'm dealing with the fact that I need to really understand what my operating costs are, and then figure out what the costs are going to be on this particular contract and find a number that's going to meet that cost. If I'm in manufacturing, same thing. I'm going to sit down and figure out my cost of production. What does it cost me to make this item, this individual item? And I need to make sure I pick a price that covers that cost, and I probably will add in a little bit of a profit buffer on top of that. So it'll be the cost of the item plus a little bit of profit margin. So that's what we mean by the nature of the market. I need to know the market that I'm in and how that market tends to operate between the relationship between the customer and the buyer. I'm sorry, the customer and the business. Competition, I need to know how many competitors are out there. I need to know what they're offering and how I want to compete against them. My marketing strategy goes back to the circle, the marketing mix. I need to know what am I selling in terms of the product or service? What are the quality elements I'm trying to put in there? What are the attributes that I'm trying to tell to the customer? How am I trying to get it to them? Either online, in a physical store, or in both. I need to think about how I'm doing my advertising, my promotion. Am I using social media, television, radio, so on? And then ultimately, that price has to support that part of the strategy, the other parts of the strategy, the product development, the distribution, as we say, and also the promotion. The price has to cover all that, plus all the operating costs. So that's what we mean by the marketing strategy. Pricing has to be included with the other three. You cannot hold it separate. You cannot think about it being separate. The customer and value promises made by you. So what am I promising the customer? Am I actually meeting those promises? And that comes from doing the survey work. And then what's the general business conditions? Right now, it's kind of volatile. Eventually, it will settle out. How do we know this? because the Federal Reserve Bank just this week said they're about to raise interest rates. So when they start raising interest rates, as far as they're concerned, it's time to get back to normal. So no more of these low interest rates. Let's get them back up to a place where we believe they should be. So general business conditions are moving back to where they once were prior to 2019. Still may take another 6 months, 8 months to get there, but that's where we're trending. So you need to look at the market around you, look at what's going on around you, and sort of assess where your price should be based on some of these general business conditions that we're in. So again, this is your owner's checklist. Just sort of summarize, help summarize what we've talked about so far, and it'll help you again in your pricing decision points. Discussing various pricing options used within the marketplace. So we're going to get into some of the pricing strategies that are available to you. And again, just a helpful chart you can use as a reference, and you can of course ask some questions about it as we go through them. All right. So when we're thinking about the price we want to offer, and what I mentioned to you earlier, that you should have a revenue goal set for yourself for 2022. You can also, if you want to go a little bit deeper with this, use what we call the business objective. And there's 5 items there. What this does, it sort of puts in motion a formal pricing strategy. So when I say formal pricing strategy, you have your revenue plan. You say, this is what I want to do in terms of revenue. With that first bullet, it talks about profitability. I want to achieve this level of profitability. That's what I want to do for 2022. You may have a different strategy. You may say, here's my revenue strategy. The way I'm going to get there is to sell to a lot of people. And how I'm going to do that is come in with a relatively low price that still covers my costs, but I'm going to make a lot of revenue and a lot of profit because I'm going to sell a lot of stuff. That's what Walmart does. And we would call that a volume objective. So for all of you, you can sort of, in your game plan for 2022, say, here's my revenue target, and which one of these objectives do I want to put before myself, and use that to guide me as I move forward into this year. Okay? It will just help you to formalize it. It may be a little uncomfortable to you today, but if you just practice doing this over time, you do it repetitively, it'll become second nature. And it'll become part of your discussions with your management team as your company grows. It'll be something you can communicate to your employees so they know why you're doing what you're doing, why you set a certain price, so that everyone is on the same page. So once you have it locked in your mind, how you want to proceed, it's easier to communicate it to everybody else who's in your circle. All right, so here are some pricing options, and I'm going to open it up for just general Q&A for you. So this is going to be a list of about 6. You can go to any marketing book. So I'll just tell you where these came from. You can go to any marketing book, and it'll have at least 20 different pricing options that you have available to you. And it all depends on, one, your objectives. What are you trying to do this year? What's the market condition? What's happening with your competitors? You have to sort of make those decisions. Once you make those decisions, you can pick a pricing option. So let's take a look at this. One is price skimming. Price skimming is what you see when you look at Apple Computer. So Apple will come out with a brand new iPhone. That brand new iPhone will come in at $1,200, and it'll stay at that price for about 6 to 8 months. And then once they've made enough revenue, they start to drop the price. So they'll drop it to $1,000, they'll drop it to $9,000, and they'll drop it to $8,000. And they're dropping it because they still want to collect revenue. They just know they can't collect the revenue at the same rate and at the same level they were doing before. They can do that because they have such a hot product. They have a product that everybody wants. So if you have that service or you have that product that everybody wants, you could do the same thing. You could charge a little bit higher price now because it's a premium service. And then as sales start to fall off, you start to gradually lower that price to grab interest and bring people in. But the whole point of price skimming is that you're trying to collect as much revenue as you can, as many dollars as you can over a short period of time. Fixed price, we've talked about that already. You tend to see that when it comes to contract work. So someone wants me to do something for them. They're willing to give me a contract. I give them a single price for doing the work, and they agree to it, we move on. You see that with general contractors. You see that with plumbers, electricians, again, people doing work with the government. Market penetration. Well, what is that all about? Set a low introductory price to build volume quickly and expand market share. Now, I said earlier, you don't want to come in at a low price and then try to fight to ratchet it back up. Read the sentence a little bit closely. It says you set a low introductory price. So what you try to do is you come in a little bit below the going price that's out there, because you got something that's really hot and you want people to try it out. And once they try it out, you know it's going to take off. And once it starts taking off, then you can start to raise the price a little bit more and capture more revenue. So it's a strategy where you're just trying to get into the market. You're not going to drop the price too low. You're going to come in maybe a couple of dollars, 10% lower, 7% lower. Low enough where people say, I'm going to try them out. And they try you out. Once they like what you're doing, demand is high, you can start then raising the price above the standard and bringing a little bit more money to your business. A cost-based price is you understand the costs of what it takes for you to produce something. So we have somebody who does photography. You sit back and you figure out how much it costs for me to produce a deliverable for my clients. And then I want to make sure I always make a profit. So you add another couple of dollars on top of that. So every time you have a sale, you're always profitable. So that's cost-based. Price discrimination. Business charges different prices to different customers for identical goods. So I'm selling the same thing to someone, but I'm charging them different prices. Where that comes in is usually around events. So let's say I was an event planner and I got this artist coming in town. You know, we start the ticket sales 3 months in advance, and ticket sales are going well at regular price. But as we get closer to the event, now demand is extremely high. I have a small number of seats left. So now I can charge a much higher price. So there you're taking advantage of supply and demand. So you can do the same thing. We heard earlier, if we know my manufacturing operations at nearly 100% capacity, have this other client that wants to come in and they're desperate. They need to have the work done. You say, well, guess what? In order for me to do this, I may have to do some overtime. It's going to cost you more. So therefore, I may have to charge you a little bit more. If they agree to it because they really need it, then you're able to charge them a little bit more. So that's what we call price discrimination. And the last one, this is something that's very good for people in professional services. It's used quite often, and it's called bundling. So what this means is a company bundles a feature or attribute with the mature offering. Well, what does that mean? It just means I come to you and I say, I'm going to provide for you some consulting services because that's what you need. In addition, because I have such a talented team here, we're going to add a couple of other services, quote unquote, free of charge. And you're doing that because for you, it's low cost. I already have the people working for me. I got to pay them anyway. So incrementally, it's not costing me anymore. But to the client, they love it because you're offering them more than the competitor. You're offering them more than they could have ever expected. So now they're willing to pay this one lump sum fee because they're getting what they need, the consulting services, plus the add-on that you're putting on. So again, that's what we call bundle. And a lot of people use that because that's just an enticement. If you can offer a little bit more to the customer, that may help them tilt a little bit towards you versus tilting to your competitor. All right? So, wrapping it up, what you want to do, you want to identify the marketplace needs and wants. What's going on in your customer's mind? Know that well before you set that price and communicate that price. Document your pricing objectives. I want to be profitable. I want to be able to sell high volumes. I want to be seen as the premier market leader. Build a network of peers or an advisory board. And what I mean by that is have people that you can talk to, that you can discuss with. You don't have to share with them your profitability, but you can talk to them about pricing options, right? What are they doing? How are they approaching the market? How do they see the market? So if you have an advisory board, that's even better. If you have a set of trusted peers who are business professionals too, even better. Define your go-to-market pricing strategy, and beyond communicating your intent, the company must ensure all systems are available to deliver the promise. So ultimately, after all is said and done, when the customer comes to me and agrees to my price, I still must make sure I can deliver, because that's ultimately going to protect your price. Because if I can't deliver, my price is not going to be able to be withheld. Withhold it. I'm sorry, withhold is terrible. You will not be able to maintain your price, and therefore you're always going to be adjusting it. So you have to make sure you can also deliver on what you promise. So I end with this quote: "A man's mind once stretched by a new idea never regains its original dimension." So I know I stretched you today. Pricing is a difficult concept, but it's not impossible to understand. So I open now to any questions that you may have. We do have time for a Q&A, so please. I'm going to stop the share so I can see your wonderful faces. Oh, Janine, thank you. Thank you for being here. So anyway, what do you think? People are just quiet.
I'll jump in.
Go ahead. Go ahead.
One of the things you said early on was, in a lot of businesses, pricing is public, and ours is not. And it can be very transactional too, which
Mm-hmm.
we're really working hard to make it less so. So it's not just in our business, we bid almost everything. So it's blueprint, quote, purchase order, parts, payment, next. I mean,
Yes.
that's all we do. And so we're working on trying to make our customers feel understood, make them feel heard about what they're buying from us, even if the end result kind of is the same. People want to be heard. They want to feel like they're part of it. And we're trying to like be aggressive in talking about that we don't want to have only transactional relationships. But so from that end, it really seems to be working too. But it's interesting because our feedback tends to be the black hole of you didn't get the order. So that makes it a little challenging. There are customers who will say, "Oh, you were 22% high." There is the question we can't ever get is like, how did you do that math? What 22% are you talking about? Because I mean, like, there's the divisor, there's the multiplier. You can't really know what methodology they're using, and you don't really wind up in exactly the same place. So we're working on that based on a lot of things that Paul learned from the Goldman
Mm-hmm.
Sachs program,
Mm-hmm.
and it's
Mm-hmm.
been very, very valuable.
So Laura, I think you bring up a good point. So when I was using the phrase public, I just meant from the negotiation standpoint. Eventually, you got to share it with somebody, and you're going to share it with that prospective client that you want to bring in, right? So when you share that number, they're going to ask, how'd you come up with it? And you want to feel comfortable in the space of being able to share that. But your other point, I think, is very important here. And we have to think about it from a sales standpoint. As human beings, we want to win every sale because we put so much into it, right? But we have to be honest with ourselves and say, for every sale, in fact, we'll back up. Maybe for 100 sales, maybe we only close 25%, and maybe that is the industry average. So there's going to be 75% of the time when people say no. And they may say no with a reason, or they may say no with silence. But I have to accept that, right? Because they may later come back to me. So I love what you were saying in terms of the preparation you do. Because when you put your best foot forward, you say, this is what we can offer you in this space. You're trying to be profitable. You don't want to sell at a loss. And you share that with them. They may want to say, let me go out here. I can't believe it. Laura's too good. She's puffing this up too much. They go out there and they test the market. And they find out, what, she was right. In fact, we had a bad experience with this contractor or with this manufacturer. We're going to go back to them. And that's ultimately what you're trying to do. I'm trying to make sure that when they walk away from me, either they signed the contract or they didn't. They understand who we are and they understand what we can deliver. They have to ultimately make the decision whether or not they want to do it with us. That's why I say it's a negotiation. And so you don't want to, make yourself desperate and say, I got to keep dropping the price to make them stay. And eventually they'll take it for sure because they know you're undercutting yourself. And they're still going to demand that price, even though you're drowning, right? So that's why you got to, hold your price. Go ahead.
And I think going historically, let's say over the last 10 years, there's been an expectation that you're going to hold the price from the last time as well. Like nobody's costs have ever changed. This is it now and for the rest of our lives together. And I think now we're actually seeing that because of the unique situation that we are in our industry, we're able to, nobody's complaining about a price increase. I mean, they're just happy to be able to get their product because of our constraints of raw materials and labor, in generally speaking, in our industry. So
Yes.
it's an interesting place to be.
Excellent. I thank you. I thank you for sharing that.
Yeah.
Krupo, I know again you're doing the IT services. So are you dealing with both doing the flat fee, or are you doing hourly? What have you decided to do? Or are you doing both?
We are going to start with hourly mostly because in some of the work that we're doing, um, if you go in with a fixed fee,
Mm-hmm.
sometimes the client doesn't know what they want, or
Yes.
things
Yes.
start to get scope creep, and now you've locked yourself into a fixed price contract, and you might be adding more resources to finish it.
Yes.
So my goal is to start time and material and see, as we become more familiar with the clients and the clients become familiar with us, what makes sense. I think sometimes, I managed the vendor space at State Farm, managed $500 million in expense. And,
Mm-hmm.
sometimes we would get companies coming to us with, oh, we'll do this for, $500,000. And then you start doing the hourly rate and it's like, they are making $400 an hour,
Yes.
so,
Yes.
the client can do the math just like we can. And I want to deliver quality service to our customers, and I'm not trying to fleece them. And so how do we do that in a way that's most transparent? And I think doing the hourly rate at the beginning of the relationships, I think would be helpful. So that's the way I'm starting it.
So I love that. I love that you're doing the time and material, and you're trying it out with different clients down the road. If the relationship is a long-term relationship, they may get comfortable with a fixed fee rate going forward because they just say automatically, we love you, we're going to put you on retainer, and off you go. What also came to mind is as you debate on the hourly rate, you're going to have to look at that comparison point. What should the rate be for what we're offering? Because you want to do 100%. You want to give them over their expectations. But the question is, what does that number look like? Is it, again, you don't have to tell me the number, but what should that number be? Should it be 250? Should it be $400 an hour? Should it be 115? The other one is for you. This I had always debate this one. Are you worth it? If you sit back as a founder and you say, what is the value of my time? Am I $50 an hour, or is my time really worth $250 an hour? And if you answer that question for yourself, it becomes a little bit easier to set that rate. Because if I'm the client, I'm going to push back against it, right? Because that's what I got to do. I got to push against it.
Right.
And I'm looking for you to justify why you believe that number is valid, right? And if you do the homework about what others are offering, you can say, hey, this guy is over here is at $250 an hour, and here's what they're offering. Guess what? We're doing that and then some. That kind of thing.
Yeah. And I think, going in with different hourly rates based on experience and
Yes.
who the person is. I don't have a goal of everyone. I might go in when I'm building a mainframe strategy project at a 250, but I might be billing a PM at 110,
Mm-hmm.
so it'll depend on the work and the skill and all of that too. So
It does. It does. It does. And I'll also argue one last thing on it. Sometimes you don't have to adjust the rate. You adjust the scope of work. Because remember, it's revenues is price times a quantity sold. So what I could sell them is on the hours, right? So here I'm providing you these hours, and boy, look at what these hours include. My rate's always the same, but the hours adjust to fit their budget, kind of thing. So I don't have to keep going back and forth with the hourly rate, because eventually people start to talk, right? And they say, well, how much did she charge you for that work? Oh, she charged me $150 an hour. She charged me $250 an hour. Whoa, wait a minute, what's going on here, right? Versus if you set it up by hours, you may not have to get into that debate in the future. That's all.
yeah.
Mm-hmm. All
Thank
right.
you.
How about Sharon? If you're still there, or Gabrielle? We have a couple of minutes left. Any
Okay.
questions, comments?
Well, I was going to say this is perfect for me because I'm thinking about the fact that with the COVID and long-term COVID, then that adds yet another layer to the research that I do. So I'm looking at the price objectives that you listed, and I'm finding myself in several categories when it
Hmm.
comes to that, especially the bundle. But at the
Hmm.
same time, the which one was it? The price discrimination.
Yes.
Well, um, and that's only because at the heart of everything I do is the public's need to know. But when it comes to corporations, I understand that much of what they're looking for would be probably retirement seminars and things. So it just fluctuates. But I also know that when you're dealing with, let's say, hospitals and social workers, then there's a
Hmm.
more on the disability part of it. So I can see myself in several categories. And I want to add that you have been a lifesaver for me because of, I listened to the one last week, Christine. That was excellent, excellent. I wrote down every word. And so this has been like a rope for me,
Hmm.
even with the competitors, because I'm in this kind of niche, unique
Yes.
position. I've been in the inside of government and I know what's missing on the outside. And I also know the challenges that we are being faced with because of early retirement and exodus and
Hmm.
things like that.
Hmm.
So it's so timely, but at the same time, my the people I'm selling to, they don't know what they don't know.
Right.
So I have to make I have to make a case for myself. I even see myself a little bit in the lifestyle that you didn't really discuss, but I understand exactly what that is about also. So I am just overjoyed and just so full of gratitude for
Hmm.
just this voice of reasoning for me. Thank you.
Well, thank you, Sharon. I think you're right. This topic falls in the area of marketing, and we could spend 2 days just talking about marketing. What is marketing strategy, and we're just peeling out price, but you got to still tie it back to marketing. So everything you talked about as a professional services firm, you say, okay, how do I let people know about my services or the quality of my work? That's why people are out here doing podcasts now. That's why people are out here doing newsletters. That's why they're out here doing posts on websites, because they want people to read about them. They want them to know about their expertise, because then ultimately you can go back now and negotiate your price, right? So everything you brought up is important to do. Do the research around the audience that you're going to target, so you know what their needs and wants are. So then you can package your promotion or your awareness campaign around what they need, and that you can actually satisfy that need for them. Then they bring you in and you say, okay, because I'm so experienced in this, I know exactly how much time it takes to do based on the rate that I have. Here's what I'm going to charge you. And hopefully your preparation makes it comfortable for them to say, you know what, that price you have seems reasonable for the services you're offering. I'm willing to move forward with you. That's the sales process then. Keeping in mind that all sales may not end up positive, meaning it may not be a sale, but you got to go through the sales process in order to get there, get to those clients that eventually will work with you.
Thank you.
Yeah. Gabrielle, think you're the last person. Yeah, I can't see that black box. I don't know what that is. Any statements from you or any questions? Because I want to make sure I've covered
Yes,
everybody.
I I did have a question. So lately, in my business, I've been testing out getting deposits from my clients, and I've been trying to see the difference of adding deposit in well, taking the deposit from the current total or making the deposit separate from the total itself. I was trying to
Okay.
just tr do like a test trial this year to see if would that work out? Which one would be like the better route, pretty
Okay.
much?
So I'm going to ask you to put on the customer's hat. I approach you and I say, guess what? You're a photographer, am I correct?
Yes.
Okay. So I approach you and I say, you know what? I'll come in and take a picture of your family for you. I'll give you, X number of shots in these different locations. I'm going to charge you $1,000 for that. They go, okay, great. Oh, also, I need a deposit. The deposit is going to be an incremental additional $250. So for me, the customer, what is my total cost for your job now?
1,250.
$50, right? So now the customer is going to go, oh, this cost me $1,200. I wonder how much Chuck is going to charge me down the street, who also does photography, because I thought he did the neighbors for about $700. So where I'm going with this, it is okay if you say, I need a down payment before I do this work. So I usually charge 10%, 20% of the fee, and I need that in advance. So then I know we're sincere about this. So if I charge them $1,000, I charge you 20% down payment. That's $200. You give me the $200, then I'm expecting $800 at the end of work. All right. I tend to embed it inside the fee because I'm telling them this is what it's going to cost you. I don't want them to think, oh man, you got me in this one and you hit me with an unexpected cost. I don't know about you anymore. I'd rather just say, here's your total cost. Of this total cost, I do require a 50% down payment, 20, 10, whatever the number turns out to be. And the balance is due at the close of the project.
Okay. Okay, that makes me feel more better because I've been doing the total. Well, I've been taking the deposit out of the total, and I haven't had any complaints or anything. So I think if I keep
Yes.
going, it probably still work
Right. You're
out.
not going to have any complaints because people say this is, in a way they're saying, oh, I've already made partial payment. So I only got a little bit less I got a little bit left to do. Versus you go, you owe me $1,000 plus you owe me another $250. They're like, whoa. Now I got to, I got to pay against $1,000 and I got to pay you $250. That's a lot of money. It's what people tend to, how consumers think. So I'll just throw that out to you.
Okay, thank you so much for that.
All right. Christina, I'll turn it to you.
Awesome. Well, thank you so much, Dr. Calorie. As you've received feedback from our participants, this was very helpful. You all will receive a recording link from this session. You'll receive Dr. Calorie's PowerPoint as well. So look to receive that within the next couple of days or so, just to get it sent over and everything. And Dr. Calorie will be facilitating the third workshop in this series, and that will be February 11th. And that workshop will cover, I just had it pulled up. And that workshop will cover making sense of the key financial statements for freelancers and entrepreneurs as you build your business in this COVID-19 environment. So you'll receive a link for that workshop in the follow-up email as well. So we appreciate your time so much. We appreciate you, Dr. Calorie, for being an awesome facilitator for us today. And if you all have any questions or need anything from me, please make sure to touch base with me. I'm more than happy to be helpful however I can. Awesome. Happy Friday.
Thank you again for everybody being here. I appreciate it. Thank you for your contribution, which is important for us to have conversations with you. So thank you so much.
Awesome.